We spoke to Neelkanth Mishra in order to just garner a view as to what his outlook is on the markets. Just to put things into perspective, Credit Suisse has gone ahead and recently cut the rating for metals from overweight to underweight. They say one should be booking profits on metals and reversing the positions that were added in December 2020. The portfolio additions for Credit Suisse include, adding Ultratech, Asian Paints to the portfolio. They believe that cements as well will benefit from the low cost of globally priced inputs, and they've added beneficiaries that they believe will see normalization in the portfolio. Also overweight on banks and industrials as a whole, particularly the private sector banks and even an SBI. Well, today we spoke with Neelkanth Mishra in order to understand his outlook on the impact of a potential third wave, the liquidity situation, as well as how he sees earnings growth shaping up going forward. Well, he was of the view that we will see growth surprising on the upside. In fact, he remains optimistic that the FY23 growth forecasts are going to be bumped up quite meaningfully when it comes to the overall earnings as well as growth going forward. In fact, he says that the pace of economic recovery is going to be better than what one had anticipated. He sees a high likelihood of an upgrade in the corporate earnings and believes that there is a likelihood of the earnings estimates getting revised on the upside. In fact, he says that after we had seen quite an impact due to the pandemic, where one had witnessed the periods of production halts in the year 2020 across sectors coming in, things are gradually reversing and improving, and we're starting to see a correction as well in lumber, palm oil and steel prices, which make up the input costs for a lot of corporates. As of now, he believes that petrochemical margins as well are starting to come off. The markets, though, when it comes to the valuations, according to Neelkanth Mishra, are extraordinarily expensive, in fact, on a PE multiple basis. He believes that the markets are pricing in that we will see a strong earnings recovery kicking in, and that with the vaccination process as well picking up steam across the country, we will see states as well seeing their overall spending pick up. He's of the view that one needs to be very cognizant of the kind of risks that are evident in the market, that the global financial volatility does remain a major risk for Indian equity markets. In fact, the underperformance in April has seen India that we witnessed has been covered up in May. There's a significant increase now in wealth as well as income inequality, but that is a risk. He believes that it's almost inevitable that we will see a third wave of COVID. We need to be careful with respect to what you're buying because it's a lot of quality names that will stand the test of time.